Welcome to this week's live ASX strategy session. Thanks for joining me. Great having you with me as always. Plenty to talk about as usual. Bit of movement going on in the ASX 200. We've got the commodities to have a look at, what's been going on in gold and copper and uranium. And also I've got a couple of stocks for you at the end, which I think are interesting, worth having a look at. And of course, if you've got some stock codes as well, anything you want me to have a look at, pull up the chart and get a technical overview of it. Yeah, get those ready. We'll go through those at the end. Now, of course, everything today is general commentary only, doesn't take your personal situation into account. Now, having gone through all of those things, let's jump into our first chart for the week. So ASX 200 up here on the screen. And it looks like, at first glance, it looks like it's been a pretty quiet sort of week, not a whole lot of movement. But there's actually been quite a bit going on internally with the individual stocks. Now, I'm going to come back to that in a moment. I think there's some important movements to talk about. But first, while we're on this graph, let's talk about the ASX 200. And I think the positive here is that just in the last week, the ASX 200 has been doing a pretty good job at holding on to its recent gains. So if we just look at the rally off the September low, so September low, nice strong rally up into the high at the start of the month. And I describe this rally, so this rally off the September low, I describe that as being impulsive. Now, what I mean by an impulsive rally, that's where the buying pressure and the upward momentum is strong, whilst the pauses and the consolidations along the way are generally quite shallow and choppy. So that's what an impulsive rally is, where you're getting that general strong upward momentum. And here's another. This is a good example of an impulsive rally back here in December. So really strong move, and then the pullback was corrective looking. So that's what I mean when I talk about impulsive rallies. And if we just look at the last week, just in the last week, again, it's been that sort of shallow and choppy pullback. No real momentum to it. And this is often a sign of a temporary pause in an underlying trend. We can add in some short-term support on this chart as well. So just looking at these recent highs and the recent lows, what we could do, we could draw in roughly around about 8,100. So you can see it takes in like a little bit of overshoot in August, but generally speaking, we can see that the highs have been held around 8,100, and then the lows have been supported around there too. Also coincides with where the 50-day moving average. So I've got the 50-day and the 100-day moving averages on the chart. So we've got this dual support zone around the horizontal support and the 50-day moving average. There's certainly scope for some more consolidation from where things currently are. Maybe the next week or two could see some more sideways or corrective price action. But I think the overall structure, when we step back and we look at this, that overall structure, it does remain bullish with price above these rising moving averages. Now, I want to go over and have a look at the equal weight, the ASX 200 equal weight, because I think that's an important chart, and it's a chart that really does interest me the most at this point in time. So coming over to the equal weight. Now, the thing with the equal weight, of course, if you've been watching these videos, you know, is the equal weight, it ranks the larger stock and the smaller stock the same, which is different to what the ASX 200 does, which is market cap based. So we get this overall picture of what the market's doing when everything's ranked equally. And what I think is interesting here is that it's giving us this clear picture of the underlying state of the ASX 200. Now, last week we discussed the equal weight had just broken higher, from a 6-month trading range. I just quickly draw that trading range on the chart. You can see, yeah, for 6 months, tracked sideways, got that breakout last week. What I really like about This week's price action is that the equal weight has been holding on to much of this recent gain. So just look, there's a bit more of a pullback coming in today, but even from today's low, the market at the time of filming, and we're around 1 o'clock in the afternoon, it's already come back quite a bit. So it looks like there's some good underlying interest in buying the pullback. And I think it's really positive the market has been able to hold on to most of the gains in the previous 2-3 weeks. And so again, that suggests that buying interest on pullbacks. As I was saying with the ASX 200, I think there's scope for more consolidation. The strength of the rally has, like, you look from where we've gone from below the moving averages to above. I think the strength of that rally, it has stretched the index above these moving averages. So as always, I've got the 50 and the 100-day averages. It is just pulling a little bit away from the moving averages. And when price does become stretched, it does become more susceptible to some type of a pause or a pullback towards the moving averages, or even just sideways as the moving averages catch up. So I'll be watching how this pullback that we're currently seeing develops. I think to keep the bullish structure looking strong, what I'd like to see would be seeing the pullback hold above this breakout point. So the breakout point from a couple of weeks back, that would be the first step. And also just seeing that choppy overlapping structure. So I'll show you an example of a choppy overlapping structure. A couple of examples from earlier in the year, from January. Here's an example of a strong impulsive rally. Then we had a zigzag correction, so it's choppy and it overlaps. And then in February we had more of a sideways consolidation. Again, it's all choppy and it overlaps. So something like one of those would be like ideally what we'd see in this current period, to give that structure to potentially set the market up for higher levels. It's also interesting to look at what's happening in the Small Ords and the emerging companies. I think they're a big part of this story, and they've got their own technical structure, which I'm going to go through. I'll come back to those in a moment. Before I get to that, quick look at what's been happening internally with the markets. And this is interesting. So first of all, let's go and have a look. We'll have a look at the financials. So this is a beta shares ASX 200 financials ETF. So it covers covers the financial sector. And we've looked at this several times over the last year. We had a clear breakout last November. There's been a nice strong upward trend since then. You can see there's been several pullbacks towards the moving averages over that time. And with those pullbacks, some have been larger pullbacks, some have just been shallow pullbacks back to the averages. And when the price gets stretched, and you can see this has happened several times, as the price has gotten stretched, it does tend to come back to the averages. This is what we're currently seeing now in the financials. Prices got stretched, now it's coming back to those moving averages. And this is where buy the dip can be its most effective. I like to buy dips when prices are coming back to rising moving averages, not when prices are not at the other end of the scale where prices are below declining moving averages. Not interested in that, but buying dips coming back to the averages, that can work. That can be a good and effective strategy. And the thing when we look at this, so just looking at this recent pullback, the big banks make up about a quarter of the ASX 200 on a market cap basis. So when you consider the financials are down by about 6.5%, actually looking at today, they're actually down by probably getting close to 7% now. You wonder, look, if a quarter of the market is down by 7%, how is the ASX 200 holding near its highs? And the answer to that lies with the big miners, which have been doing the opposite. So this is the ASX 200 materials index, which BHP is the largest portion of that. So when you look at what the materials index has been doing, it's up by nearly 20%. And so the big banks, they make up a greater weighting than the big banks make up a greater weighting than the miners, but the miners are up more. They're up by 20%. So the 20% here and 6% down, 7% down in the financials. The two are largely balancing one another out. That's why we're not seeing much movement in the ASX 200, while internally there's quite a bit going on. So materials, when we just compress this, look at a bit more data. These materials remain in a large trading range. Let me just sketch that in. Been going on for about 3 years, this trading range in the financials. And as we've seen this year in gold, when these big ranges break, they can lead to some really big moves. Too early yet. We've had this really nice rally in the materials, but it's too early yet to be looking for a breakout because it is still very much within the bounds of this 3-year range. No guarantee a breakout will be to the top side either, but I do like this strong rally. I think it's encouraging, and this is one of the factors which could support higher levels in the ASX 200 as we move into next year potentially. Just coming back to the ASX 200. Where's our ASX? Here it is here. So just quickly coming back for this for a moment. I think it's still a case of this being a bullish structure. Rising moving averages, the 50 and the 100-day moving averages continue to rise. I believe the play is to continue approaching this from the long side. And as always, I'm using those wide trailing stops to try and see off those inevitable pullbacks when they occur, and of course get me out when there's ultimately a trend change and prices turn down. So I think that exit strategy, that trailing stop exit strategy, it's a really important part of being able to manage risk within the market. Now, if you're getting some value from this, please leave a short comment. Just, hey, thanks to the video. It shows YouTube you're watching. YouTube shows other people. Please give it a like. Click that like button. And it really helps just doing those small things. It really does help the time it takes to put all these things together for you when YouTube goes out and shows others. So please do those things. Now, I'm going to move on to the Small Ords in a moment. I've got the commodities to go through, a couple of stocks, your stocks to have a look at too. So we've got quite a bit to cover. But of course, that wraps up the free section. If you're not a strategy session member, link below, click that, come in, doesn't cost much, a whole lot going on for not very much contribution to making all this happen. Okay, so let's start with our small ordinary.